Guys, welcome back to another Moon Monkey Trades video. Glad to have you, especially if you've revisited my channel over and over. Thank you so much. If you're new here, this is Moon Monkey Trades. I'm Chase Miller, and I go over all types of different things: candles, charts, watch list. I like to post watch list typically on Sundays. Sometimes I do, sometimes I don't. Sometimes I get them in the midweek. It just depends on my schedule. I try to get as many videos out there as possible. I did take a little bit of a break, especially with the market being crazy. And if you aren't aware, September and October are some of the most volatile months of the year. But what I'm going to show you today is how you can trade gap ups like today. So the market dropped pretty far yesterday. I think it was down almost 900 points at one point during the day. It recovered a little bit of that toward the end of the day, but we still ended up down pretty far. But what that caused is, people were able to jump in and get stocks that they believed were at a discount, and it created a lot of buying pressure on some stocks. So I'm going to show you a quick example right here on Uber. You can see here there's a lot of buying pressure already as we're kind of coming off this bottom. We consolidated. We have the 9 over the 20. But if you notice, we have significant amount of volume than we had over the past several weeks. Everything is headed straight up. What helped that even more is the market was up today. People believe they were getting at a discount. We were already consolidating here at a bottom and looking to reverse. And you can see here, we got this bottom here, and then it pulled back a little bit, but didn't go quite as low, which is another indication. Heavy volume, and we gapped up today. And when we gapped up above the 50-day moving average, which is a big buy and sell point for big investors. So if it is below the 50 moving average, then typically people are looking to short, and when it is above, people are typically looking to go long. So when it breaks above or below the 50 moving average, you can see back here when it broke below that there's a lot of selling pressure, and then it kind of floated around it a couple times. It got rejected here off the 50 and people sold off again. But once we break above that and can hold it, then it can really take off. But I'm going to show you a gap up trade that I made today on Uber, and I'm going to show you the trade that I made on Apple. There's multiple different trades you can make with gap ups. You can't just keep trading the same pattern over and over because it's not always going to act the same. So I'm going to jump in to today's chart. When I'm looking to enter trade, I typically look at 5 minutes. I do zoom out to 10 minutes here and there. Sometimes I'm looking for a different type of buy signal. So there are multiple patterns you can trade. What I try to avoid is the first 30 minutes of the market, because what happens, that's the most volatile time of the market when it's going crazy, and it's hard to get a direction of which direction it's going to go. So just kind of wait it out and see what's going to happen first. You can see heavy volume at the open. This is what's most volatile. It's at least volatile around lunchtime, and then we kind of start picking up a little bit more at the close with the volume and the volatility. So it's kind of like an upside down bell curve. So what I'm looking for is, like, you see this first candle took off, and new traders will see this first candle take off, will jump right in, and a lot of times it'll come right back down and then start falling to the downside, and they'll instantly start losing money. So I try to wait the first 30 minutes. So I'm looking for flag patterns. I'm looking for pullbacks. I'm looking for all kinds of different things. Bounces off VWAP, bounces off the 9, bounces off the 20, bounces off the 50 moving average if it drops down. But what I'm looking for is when we have a gap up, like you can see here, this gap up in the pre-market from yesterday to today. About 80% of the time, if it starts to drop, it will fill half this gap. And I think about 40 to 50% of the time, it will fill all the way down and then bounce. So a lot of what happens was they'll get this big green candle, people enter, and then it'll drop down and they'll get out because they're losing money, and then it'll just bounce and it'll go higher than they originally bought it, and then it's just a painful mistake to make. I still make the same mistake sometimes because I get eager to get into the market and impatient. But on this particular trade, we didn't get the gap fill. So what did I look for? We got this pullback, and what I look for is a close above this consolidation at the first, hour or so of the market. And here's that big green candle. We closed above that, and this was in my entry point. We pulled back down to the 9. I actually added to my position here as the volume started to fall off as we were coming down. So we looked pretty strong. But I'm just making sure that we don't close up below this big green candle here. My stop or stop loss would be below these candles somewhere. Kind of gave myself a little bit more of a cushion. And we ended up running up pretty far. After about lunchtime, it started kind of top out, and I had 3 options on this, and I went ahead and sold one of them and locked in some profit. So I still have 2 calls on Uber. So looking for that swing trade. But that's just one way you can enter these gap ups. Another way you can enter is if it actually does fill. So I'll jump over here to Apple. Zoomed down kind of far right now, but as you can see, we're on just today. This is Apple today on a 5-minute chart. We have this gap up, and we got a 100% fill of the gap and then bounced. So that is another trade that you can make. Like I said, the first 30 minutes I stay away because you see how it ran up. A lot of people will see this big candle and try to get in, but look here, we didn't get above the pre-market highs at all. We dropped back down, and a lot of time these people will get stuck in this trade and hold it out, hoping for a bounce. They'll get a little bit of a bounce. It'll start to pull back again, and they'll get out at a loss. And then later in the day, the stock runs back up, and they could have at least broke even. So I entered this trade on Apple. We pulled back down. Here we bounced. We got half a gap fill, but ended up pulling back down and getting a full gap fill. We had a spinning top and a doji and a big green candle, heavy volume. The stochastics was headed straight up. RSI was headed straight up, and what I was looking for was for the RSI to come down and bottom out. As you can see here, we kind of consolidated on the RSI, bottomed out, and turned back above 45. So we hooked down below 45, came back above 45. We know that we're getting support here because we know that 80% of the time we get a 100, or 40% of the time we get a 100% gap fill. And I entered this trade. Yes, I entered it below the moving averages, but we had a lot of strong things going in our favor. I could have got in above the moving averages, but I would have missed out on a big part of the move. So I ended up swinging one Apple contract, and we're currently up on that. It got pretty volatile after lunch and swung up a little bit toward the close and pulled back down. So it was a little bit of a crazy day for Apple, but we did get a good entry for the swing trade. So there's 2 ways you can trade gaps. There's multiple different ways. I've showed you on my channel, my previous videos, pullbacks to the 9 and flag patterns as well. But these are 2 very, very common patterns that a stock will make when it gaps up in the morning. So like I said, don't trade that first 30 minutes. Wait for the chart to start picking an actual direction. Usually the second move is the direction that the stock is going to go on. So just be patient, wait for the right entry, double check your volume, follow your rules, and just be patient. September and October, don't forget, a lot of volatility going on. Thank you for everybody that subscribed to my channel. If you haven't subscribed, please drop a like and subscribe. Maybe comment on this video or another videos and stuff that you would like to see in the future that I can make for you that could possibly help you out. At 500 subscribers, we'll be giving away a free pair of AirPods. So if you don't hit that subscribe button, you're possibly missing out in the future on a free pair of AirPods. That is all I have for you today. Hope you guys enjoyed it. Come back and check us out. Peace.